everyone, let me ask you something. Have you ever wondered why businesses keep stack of records and fill out endless reports? It's not just for show. Those records and reports are the backbone of a healthy business. They keep the numbers honest and the business running smoothly. In this lecture, we will talk about why these things matter and how to do them right. By the end of this, you will understand why reporting and record keeping are important in business banking. Know the key reporting requirements businesses face. Learn best practices for keeping accurate and organized records. Reports and records show the truth. They keep a business transparent, legal, and ready to grow. Without them, you're flying blind. A business needs records to meet tax obligations, follow banking rules, and handle audits. Imagine this, you're being audited. If your records are sloppy or missing, it's a nightmare. But if everything is in order, it's just another day. Good records build trust with banks, investors, and government agencies. Think of reporting as a healthy checkup. Regular exams catch problems early before they grow. Financial reports do the same. They show if something's off with your business. Fixing those problems early keeps the business alive and thriving. They show the heartbeat of a business. Banks, investors, and regulators use them to see if the business is strong. They're essential for tax filings, loan applications, and staying within the law. Every business must pay taxes. That means filing reports for income, payroll, and sales taxes. Accurate tax records make filing simple and keep penalties away. Anti-money laundering, AML, and Know Your Customer (KYC) rules are there to stop criminals. If a business sees something unusual, large transactions, or suspicious activity, it must report. These rules protect both the business and the system. Keep your records sorted by type. Put invoices, bank statements, and tax forms where you can find them. Digital tools help you stay systematic. Digital storage is secure, easy to back up, and quick to access. With accounting software and cloud storage, your records are always at hand. Lose the paper piles. Set a schedule, monthly or quarterly, and stick to it. Regular reviews catch errors, keep things accurate, and make reporting easier. Don't lose your records to a system crash or a fire. Use digital and physical backups. Encrypt sensitive files. A good backup plan saves headaches. Linda Moore, a financial consultant, says, good records aren't just for taxes. They're a foundation for growth and sound decisions. She is right. Records aren't just paperwork. They're tools for building a strong, stable business. Simplifies taxes. Good records mean fewer errors and less stress come tax time. Supports loan applications. Banks trust businesses with clear records. That trust opens doors to financing. Drives growth. Accurate data shows where a business stands and where it's headed. Protects legally. Records settle disputes, meet audit demands, and show compliance. Pick a type of financial record, an invoice, a bank statement, or a tax form. Write a one-page summary about its role in compliance and operations. Alright, let's discuss. What do you think? Are digital records better than paper ones? Share your thoughts in the comment section. Reporting and record keeping aren't just chores, they are a lifeline for a business. Today, we talked about financial statements, tax reporting, AML compliance, and the best ways to keep records clean and clear. That's all for now. See you next time.